Rightmove has just released their November house price index, or should I say their asking price index. And some of the data in this report suggests that sellers are finally starting to wake up to the new reality. They're finally starting to reduce their prices, and potentially they're finally starting to capitulate on the unrealistic positions that many of them have held for the past year or so. So let's take a quick look at the headline stats, and we're going to dive into the report in a bit more detail and see what is really going on. So the latest data from Rightmove in the November 2023 HPI, they have house prices down 1.7%, which is their largest monthly drop, their largest single monthly drop since November 2018. And annually, prices are down minus 1.3%. So the monthly drop is bigger than the entire annual drop, which is a very strong indicator. Remember, this follows October's house price index from Rightmove. And if we zoom in, this is what they said in October. Average new seller asking prices increased by 0.5%. So asking prices actually went up last month. But the key thing is here. This is the smallest average asking price increase at this time of year since 2008. So on the back of the smallest increase since 2008, we've now seen the largest November drop since 2018. So those 2 months together are very strong indicators that sellers are starting to come around to what is actually happening in the UK housing market at the moment. So let's jump into the report itself and go through some of the details. Just before I do, the final stat here, the number of sales being agreed is now 10% lower than at this time in 2019. Remember that all of the house price indices pretend that 2020, 2021 and 2022 did not exist, obviously because there were some exceptional circumstances during those times, but also it's very convenient when they don't want their stats to look as bad as well. So here we go. I've blown up this HPI from Rightmove, and I've also retitled it from the Rightmove House Price Index to the Rightmove Asking Price Index for new listings only. And it's important to remember and view the data in this context. If you view this data as an entire pitch of the housing market, it doesn't seem so bad. But when you view it, that this is for asking prices for new listings only, so the most bullish possible prices in the market, and the news is still negative, it's almost doubly bad. So let's go through some of the most salient pieces of information. Firstly, let's just completely ignore this title because I'm going to come back to that in a moment. Average new seller asking prices dropped by 1.7%, so over £6,000 this month to £362,000. And we know that this shows the massive gulf between unrealistic seller asking prices and actual prices, as the average house price in the UK from various sources is well below £300,000. And this is as Christmas approaches and sellers continue to adopt more pricing realism to attract a buyer. Yeah, that's fair enough. People or sellers know they have to get more realistic with their pricing if they are to attract those buyers. Key indicators point to a year that so far has been better than many predicted following the turbulent end to 2022. And this marries in with their title, Better Than Predicted Year, as sellers price more competitively. Now, when we break this down, key indicators point to a year that so far has been better than many predicted following the turbulent end to 2022. And these are the three indicators that they are talking about. Average asking prices are just 3% below May's peak. Remember, that is average asking prices for new listings. It does not include the huge amount of reductions that you can see on Rightmove in almost any area in the UK. But pricing right the first time remains key to securing a buyer. Yes, I completely agree with this, and we covered this in last month's Rightmove's HPI when they talked about how important it was for new sellers to have a realistic asking price. Otherwise, they end up selling for even less overall, and it takes them a lot longer as well. Sales agreed are now 10% below 2019's more normal market level. So we're saying that sales agreed are still well below a year that historically wasn't a great year for house prices anyway, improving from 15% below last month. So I don't know if overall you can say that as a positive indicator. And finally, the pandemic-driven stock shortage is over, with available properties for sale now just 1% behind 2019. And as we can see here on Property Line, who track the supply of properties on Rightmove, or the supply of listings on Rightmove, we can see a huge recovery in the number of new listings, or listings available, not new listings, these are all listings, number available of all listings on Rightmove. So when they say that key indicators are actually a sign that the year has been better than many predicted, all of those indicators are actually negative. So what they're saying is that in their estimation or in their analysis is that asking prices haven't fallen as much as maybe some people would have predicted. But again, this is asking prices for new listings only. It's nothing to do with agreed sale prices. Come down a bit further. 2 consecutive base rate holds has helped to keep buyer demand in line with 2019's level. Again, this is completely disregarding the past few years. The housing market is not the same now as it was a few years ago due to things that have happened over the past few years. Now, many will be looking to the forthcoming autumn statement and hoping for more than a renewal of the mortgage guarantee scheme. When they say many, I think that means Rightmove, estate agents, etc. People with vested interest are looking for yet another government bailout. Asking prices usually drop at this time of year as serious sellers price more competitively to attract distracted buyers in the lead up to Christmas. However, this year's November drop is the largest in 5 years. That all makes sense. People want to get sold before Christmas, so they kind of give it the extra squeeze and just drop that price out a little bit more, try and catch those buyers that are still there, willing to buy at this time of year. And then they go on to say, would expect to see a drop in new seller asking prices in the last couple of months of the year. So basically preparing us to see even bigger drops potentially next month as serious sellers start to separate themselves from discretionary sellers and cut through the Christmas noise with an attractive price to secure a buyer. And I think that's a great way of describing the Rightmove market overall, the housing market overall. You've got a lot of discretionary sellers, people that aren't actually serious sellers that are distorting these house price indices as their houses have been sat there for months. I've seen all around this area that their houses have been on in the start of the year and they've had maybe one tiny reduction. They're not serious sellers. If you want to sell your house and you've been on the market coming up a year, you're not a serious seller. You haven't put your price down enough to actually sell. It's as simple as that. So the greater we see this gap form between discretionary sellers and people that have to sell or really want to sell, it's going to make those overpriced properties even more obvious. But regardless of what those guys think, those guys do not set the market. The prices, the houses that sell, those are the ones that set the market rates, and that's what we'll be able to judge house prices on going forward. The properties that are agreed at the lower sales price, not the unrealistic high asking prices. Buyers are still out there, but for many, their affordability is much reduced due to higher mortgage rates. Yep, completely agree with that. It now looks like more sellers are understanding Rightmove's research from last month's report. If you haven't read that, go back and take a look. It's well worth a read. That the chances of securing a buyer are much greater if they price it right the first time, rather than basically testing the market and overpricing and then reducing their price later. And the last bit I've got in red is I don't really agree with it. Despite the turbulent end to 2022, the year to date has been better than many expected. Well, if you're judging it purely by asking prices, sure. If you're judging it potentially by some of these other house price indices that aren't really painting a true picture of what is going on, yeah, potentially. But I think many of you that are actually following your local markets and seeing what's going on, I think things are down in line with the expectations of many of the people that are quite bearish about the housing market, but we'll see how things continue to play out over the next year or two. New seller asking prices are now just 3% behind May's peak. It's almost irrelevant at this point. What does it matter what their May's peak figure was when we know house prices peaked last autumn? If you look at Nationwide and Halifax, we know house prices peaked long ago. The May peak, or the May, you can call it the May delusion peak, but it certainly isn't the house price peak. And this relatively small fall in asking prices, coupled with a stable numbers of new properties coming to the market each month, are strong indicators that forced sales are not widespread. I agree that potentially forced sales are not widespread at the moment, but some of the more recent indicators suggest that is increasing. But this bit here, coupled with stable numbers of new properties coming to the market, does that look stable to you? Because it doesn't look stable to me. So that's why I kind of highlighted that in red. So that was the Rightmove report for this month, and just a couple more pieces of information from this report. This is one I found really interesting. Let me zoom this out so you guys can see. This is how long it's taken now to secure a buyer. And if you go back to October last year, 40 days to secure a buyer. At the moment, 62 days. That is an increase of over 50%. And if you look at this by region, if you exclude Scotland, which is at 33 days on average, the others are actually a lot higher than that. Most of them are close to 70 days to find a buyer. And again, this is well worth a look yourself. Have a look at your local region to see how things are reacting, because some regions obviously fallen more than others. what's quite interesting to see is that some regions are seeing big monthly falls, and they've actually been holding up quite well year on year. So it's like all of a sudden, some of the later part of the market is suddenly catching up with the parts that went first. So if you take a look at kind of Yorkshire and Humberside here, 2.3% down month on month, but year on year only down 0.2%. So suddenly they've caught up and things have gone south quite quickly. Whereas places like the southeast, which if I just hide that there, you can see they're down 2.8% year on year and 3% on the month. So take a look at that for your individual regions. And just to reiterate what I was saying earlier on in the video about this being asking prices only for new listings, if you take pretty much any region in the UK, so I've taken Kent in the southeast, just take a look at how many reductions you've got in any particular area, and these aren't included in the Rightmove house or the Rightmove asking price index. This is the first page. I've just put Kent in. This is the first page sorted by newly listed. We've got reduced. How have we got reduced there, reduced. Do you get the picture? I think there's 25 properties on that page and 13 of them are reduced and they're not included in that data. So if Rightmove are saying that asking prices for new listings only are significantly moving downwards month on month, I think that is a very strong suggestion, a very strong indicator that sellers are finally starting to wake up to the new reality of the UK housing market, and they have to get realistic with their pricing if they want to sell their property. Now, if you're confused about what is happening in the housing market, as you've seen a couple of the house price indices actually report increases over the past month, I'm going to pop up a video now which explains exactly what is going on and why you shouldn't pay too much attention to this sudden shift in figures. So I'll pop up that video now and I'll see you guys over there.